Hi, I'm Ben Newman. Welcome to Bullish. This is a summary of our recent results in our webinars. First of all, it's free to subscribe to our channel, so please do that by clicking the link above, or you can simply apply for more information by clicking the links below in the description here. Now, we've had a fairly good week considering the markets have been fairly unsettled leading up to the Fed rate announcements. It's been very difficult to trade. And in fact, a lot of traders would be recommending that simply the best option is not to trade at all. Just hold on for what is essentially a fluctuating flat line of trends to end. And we were certainly looking at the Fed rate announcements yesterday to do that. So what I'm going to do is I'm going to talk you through how we managed to get some opportunities from the trends, even when they're in this very flat fluctuating state. So I'm going to first of all talk you through what led us up to the trades, the reasons for us placing them, and then the results we got from those. Okay, so this is yesterday's market events and how we use them. All right. So first of all, I'm going to go into Forex Factory. This is the calendar that we use for the events. This is very good, this calendar, because I think it gives the key events. It doesn't give too many, and it means that you can focus on what's really important. So we're looking at yesterday, and first of all, we can see not much happening in the morning, and we were sitting in this ongoing fluctuating state where the US dollar was sitting very strong. So what we were able to do is use the lead up to this event, these Federal Reserve events here, to produce some trades. So what we did, we're looking at economic news, and this is now, of course, but yesterday it meant that the Fed rates were left unchanged. Before that, we didn't know. We suspected that they would be unchanged and the hike would be at Christmas, sort of 60% chance of it happening just before the end of the year, and about a 23% of it happening yesterday. And that means that leading up to this event, the US dollar was likely to start losing ground. It was likely to start weakening against counterparts, and that's really where we capitalised. So we're going to focus on the Euro USD, but all the US pairings were in a similar state. So we're going to go to a 30-minute view and just show you what we did to establish this. Now I'm going right back to June here, back to Brexit, and we can see that in that time, when we look at enough historic data, we can see the true movement of this over time. So we can see where Brexit occurred, and it's at a very low level. The euro started picking up throughout August, and it leveled out again, dropped down, and the US dollar has been sitting in a fairly strong position throughout September. You can see that there. So let's go to the start of September, then we can get a better gauge on this. We'll see the euro started to pick up, and although a few spikes and so on, the trend was sitting in a fairly uniform fluctuating pattern. So let's move on a bit further, and we get to just at the end of last week where the US dollar gained, and then we were sitting very much in that same fluctuating pattern, which doesn't give us, doesn't lend itself to trades. In fact, you should just stick right away from it. So what we're able to do is just hold on and look for what a point at which we might see movement occur. Now I'm going to change to a 5-minute view, all right, and then we can see throughout yesterday, all right, this is the 21st here, so throughout yesterday we can see very much that the euro had started creeping up. Prior to that, it was sitting very flat, so we can see this going back to the 20th, but yesterday sitting very flat. The US dollar started to gain towards the end of the 20th, that was on Monday, and then it got to a point where it just flattened out through yesterday. Now, the theory was that leading up to this event, which was occurring at 1800 GMT yesterday, the US dollar would start to weaken. So this is just in anticipation for this event, and bearing in mind the US dollar was sitting in a very accelerated position against counterparts up to this point. So leading up to this event, it seemed very logical the US dollar would start to weaken, and then other major currencies like the euro, the pound, even the yen could start to gain against it. So that's where we capitalize. So we place trades here, and I'm just going to show you these trades. So the first ones we placed here, the USD Canadian, Euro USD, and the GBP USD, and you can see the only one that dropped out leading up to the event. So we placed these at a time of 1400 GMT with expiry at 1630 or 1600 on this one GMT. And that means there are a couple of hours ahead of this event occurring. That means the lead up to it meant that the US dollar would start to lose some momentum, and allow these other currencies to catch up with it a bit ahead of this event. Now, we capitalised on that beautifully. The only one dropping out, the GBP USD, but the other ones all came in. You can see the same trades here. There were similar results across all of my brokers. Okay, so you can see that there as well. Okay, so this is on the Euro USD, but you'll see a similar pattern of movement on the GBP USD as well. There we go, we can see it. It started gaining ahead of that event. Obviously, as we once the event occurred, which was this this movement here, which we can see here. Let me just show you on the price range indicator. We had to reassess our trade. So that's GBP USD, and I'm just going to show you finally the USD Canadian, so you can see this as well. So this was yesterday. Obviously, this pairing the other way round, so it means that we're looking at this. The Canadian's getting stronger, and again, the Canadian just started to gain after this flat spot here. But as we went into the 21st, leading up to these events, this Canadian dollar started to gain. Then when we got closer to the events, the US dollar started picking up again until the events actually occurring here. So this is the point at which the Fed's announcements were made. It was this period here. So everyone can see that. Let's just mark that. And this is where some much higher volatility started occurring, bouncing up and down. And then, of course, once it was apparent that the rate hikes were not going to occur, the US dollar started to subside again, and the Canadian dollar, the GBP, I'll just show you GBP. There we go, and the euro were all able to start gaining. And then all we did once we knew that the rate hike was not going to occur is we simply placed the trades in favour of the euro, pound and Canadian dollar. Okay, so the two calls and a put, and of course it stands to reason that all of these came in. They were end of day trades, so we just bridged all the fluctuations around that event and made sure that we were using the disappointing lack of information or lack of rate hike there to trade against the US dollar. Now today, I'll just show you across those brokers. There we go. So we've got 100% of the trades in the second half of the day after the Fed announcements, and that meant that out of the 24 trades placed, only 4 of them were dropped, and that resulted in nearly $900 in profit in one day. Now, going forward, we're going to show you how to consistently make $900 a day. It's fairly simple, providing you use discipline, you're using the market environment, using the historic trends, and most of all, using the market events to trade around. Now, again, please subscribe to our YouTube channel. It's free. Simply click the link above my head here, or you can apply for more information by clicking the links below. You can look at our Facebook page, Instagram, Twitter. There's lots of information. Please start following us, and there'll be more to come tomorrow. Thanks a lot.